Hello everyone, my name's Corey, and in today's video, since we are coming up on the end of the year, we're going to be discussing the 2024 contribution limits relative to the 2023 contributions. There are 5 main account types that I'm going to discuss in today's video. We're going to talk about employer-sponsored plans that would consist of 401ks, 403bs, 457s, those types of plans. IRAs, this is going to include Roths as well. Simple IRAs, SEP IRAs, and health savings accounts. We're going to discuss any limits regarding those and the deadlines for making those contributions. Employer-sponsored plans, or for most individuals, they're recognizing that as their 401k plan. 2023, if you are under the age of 50, you are now currently able to contribute $22,500 of your paycheck into that account of your own monies, where if you are over the age of 50 or older, you are going to be able to contribute an additional $7,500 for the year of 2023 if you're trying to do that here at the end of this week. For 2024 calendar year, those contributions are going to increase slightly. What I mean by slightly is a whopping $500. So you're going to be able to contribute $23,000 of your paycheck into your 401k at work, with a catch-up contribution provision for ages 50 and up being another additional $7,500. So the total that you can contribute if you're over the age of 50, for example, in 2023 is $30,000. The total for 2024 for that same age bracket is going to be $30,500. A fun fact I wanted to share with everybody on the 401k plans, which I thought was interesting when I did a little bit of research for this video. It was never initially intended to actually be a primary retirement account type for Americans. It was created back in 1978 as a part of a revenue act, and it was initially used as a tax loophole for executives to defer their compensation. Again, I thought that was very interesting. Wanted to share it with you today because it wasn't until the benefits consultant Ted Benna recognized its potential for retirement savings in 1981, which ultimately ended up with the butterfly effect rippling us to today, where I'm talking about that in this video. Now, deadlines before we move on to the next one, the December 31st of the calendar year that you were contributing into for your own contributions, that is going to be the deadline for you. Next on the list is individual retirement accounts. This would consist of Roth IRAs because they are technically IRAs, individual retirement accounts. I just know that a lot of people call them Roths and do not consider them the same thing. But for 2023, presently, if you are under the age of 50, you can contribute $6,500 into your Roth for the 2023 tax calendar year. Now, since we're talking about the calendar year, you actually have until April 15th of 2024 to put monies into your retirement accounts, the IRAs, whether it is an individual or a Roth, for 2023's tax season, all the way again until April 15th of 2024. So I wanted to make sure you're aware of that in case you were not already. Now in 2024, so effective January 1st of this year, you can start adding into your account or your IRAs for 2024 contribution limits. Those are going to be bumped up. So those are going to jump up to $7,000 if you are under the age of 50. Now, jumping back to 2023, if you are over the age of 50, you are allowed an additional $1,000 catch-up contribution. So you as a 50 or older can contribute up to $7,500 per year in 2023. That dollar amount of the additional catch-up contribution does stay at $1,000 for 2024, but your overall contributions can now be up to $8,000 if you're the age of 50 or older and you're wanting to contribute to an individual retirement account. Now, if we're talking about Roths specifically, there is a phase-out limit that applies if you fall within certain tax brackets. So I broke those down a little bit further here. If you are single and you are making more than $138,000, you're not going to be able to use the front door strategy or the easy way of putting money into a Roth. I've made some other videos in the past about Roth conversions and how those could be useful for individuals who are maybe making more than $138,000. But if you are and you are still working for an employer and you're in this bracket, there's going to be a phase-out limit between $138,000 to $153,000. So once you are officially making over $153,000 for 2023, you are going to not be allowed to traditionally contribute into the Roth the old-fashioned way. If you're married filing jointly in 2023, that limit is increased to $218,000. And the phase out limits is going to be $228,000. So I guess I should have said that as the phase out begins at $218,000 if you are married filing jointly, ending at $228,000 at that point where you are no longer allowed to contribute the traditional way into a Roth. For 2024, those numbers are adjusted. So 2024, the full contribution limit for a Roth IRA before the phase out begins is going to be $146,000 if you are a single filer. That is $8,000 more than what it was the previous year. Now, you're not allowed to contribute into the Roth after you make $161,000 the old-fashioned way as well. Again, there are other strategies which we can talk about if that is applicable to you. Now, married filing jointly, that number increased by $12,000 as well. So the phase-out begins at $230,000 if you are married filing jointly, and then ends to where you are no longer able to contribute to the Roth the regular way at $240,000. Simple IRAs are the next account type we'll talk about. Now, these have not been discussed on the channel very much, but these are good for small business owners, anybody less than 100 employees if they're not trying to get themselves involved in a 401k. Now, if you are a small business owner and you are interested in these account types, please feel free to reach out to us. My contact information will be in the description below. But for 2023, these account types available to employers and employees who are working for the employer, they are going to have a $15,500 annual limit that they can contribute into that account prior to the age of 50. Once you reach the age of 50, their limit jumps up to $19,000 for 2023, whereas in 2024, there is a small increase in these account types as well, where the standard limit, if you're under the age of 50, you are going to be able to contribute $16,000, whereas you were only able to contribute $15,500 for 2023. 2024, that's increasing by $500. The catch-up limit is going to stay the same if you are the age of 50 or older. So your total contributions, if you're age 50 or older for this upcoming calendar year, is going to be $19,500 if you were trying to utilize a simple IRA. Now, again, these are basically meant for small business owners. Simple in its name actually stands for Savings Instead of Match Plan for Employees, although it is fairly simple to get set up if this is something applicable to you. SEP IRAs. This is another small business account type, traditionally for a self-employed individual that does not have employees, because the contribution limits on these work a little bit different than the other accounts that we've discussed so far in today's videos. But again, it's for small business small business owners. The annual contributions are flexible on these account types. You're not required to contribute every year because it is your own account for you and you only. Again, unless you are a business owner that wants to offer this to employees, then there are options to do that. But you have to treat your employees as the same contribution percent as you would for yourself for your income. And I'll explain that here in just a moment. And there is no annual filings on these types of accounts, which again, small business owners tend to appreciate. Now, the 2023 contribution limits, how they work is you can contribute the lesser of 25% of your gross income or $66,000. Again, whichever is the lesser. So for an example here, let's assume you are a small business owner and you on paper are going to show that you're making $100,000 this year. If you wanted to leverage this account type, you could do the lesser of 25% of 100,000. If we're doing simple math here, is 25,000 or 66,000. So 25,000 is the lesser of the two. That is the maximum that you could put away into this SEP IRA for yourself. That dollar amount is increasing, the maximum cap at least, because in 2023, it's at 66,000 total, whereas in 2024, the maximum cap is going to be 69,000. So again, the lesser of 25% of your your gross income, with a maximum of 69,000 per year is another way I like to put it. Deadlines on these types of accounts are going to be April 15th of 2024 if you're trying to do this for 2023's calendar year. For deadlines of getting accounts set open, please contact your financial advisor or your accountant to see when the deadline would be applicable to you. Real fast, since I forgot to mention it on this simple IRA slideshow here, the deadlines are going to be a little different depending on who you are on this type of account. If you are the employer, you're going to have until April 15th to put any of your matching contributions into your account. If you are an employee, you're going to have until the end of the calendar year. Employers, don't forget you are an employee of the business, so your own personal contributions would probably have to be done by December 31st, whereas the match from the business could be deferred all the way until April 15th or even further thereafter in the event you file for extensions. So fun fact. Health savings accounts. I can honestly admit these are my favorite type of accounts for most individuals. So these types of accounts are only available to you if you have a qualified health insurance plan. Please discuss that with either your financial advisor or your tax advisor or even your HR department whenever you're working with them on your health benefits to see if this is an account type that's available to you, because it could be useful. In 2023 currently, you are allowed, if you have a single policy for health insurance, not a family plan, you can contribute $3,850 per year with a catch-up contribution if you're over the age of 55. That's a little different from the other account types. You have to be the age of 50 or older to be qualified for the traditional catch-up contributions, Whereas if you are age 55 or older with a health savings account, that's what's going to allow you to add the extra $1,000 that's available to you in 2023, for example. So if you are single and have self-only coverage and you are 56, for example, and you are on a high deductible health savings plan, then you would be able to contribute $4,850 for the year of 2023. You have a deadline all the way until April 15th of the next calendar year. So very similar to a traditional IRA and those SEP IRAs we discussed earlier. So you're going to have until April 15th to add money into a health savings account that would give you a qualified deduction. Why I put this this Iron Man here per se is because these account types, they let you funnel money through. I don't want to say funnel because that has a negative connotation associated with it, but it allows you to put money in the account before you've paid taxes on it. And it allows you to pull the money out of the account for qualified health expenses with never paying taxes on it. So I want to emphasize never paying taxes on the money that you use in the health savings account. You also don't have to get rid of the money at the end of the calendar year. You are able to let it roll over year to year, and you're able to invest these types of accounts. You don't have to keep your HSA with the employer that it's out, or if you just wanted to open one out on your own, that is available to you. Flexibility, the list of all the things you can use your health savings accounts for, it's a very broad list. I guess I'm going to leave it at that. But back to the limits for the calendar year of 2024 and how they're changing. If you are self-only, you're going to be allowed to contribute an extra $300 into that account if you're under the age of 55, so a total of $4,150 per year. The family coverage for 2023, which I have not addressed yet, is going to be a $7,750 per year annual maximum that you can put away into a health savings account for your family. That is going to be increased to $8,300 per family in the year of 2024. So we're going to have a $550 a year increase on that. There are, again, catch-up contributions. Those are $1,000 per person, which I thought was very, very interesting when I did a little bit more due diligence on this to find out. So I hope this page is helpful. We'll go on to the next page and we'll look at a chart that I've put together for us. In a recap, I put together this entire chart for us to glance at very quickly. So the account type, the 2023 limits versus the 2024 limits, plus any notable changes that we might want to recognize. So 401k plans, again, is going to be $22,500 that you can put away of your own dollars if you are under the age of 50. Whereas in 2024, that's going to increase to $23,000. The catch-up's going to stay the same at $7,500. So you're going to be able to put away $30,500 in the year of 2024 if you would like to within your 401k plan. Now, there are other strategies, which I've made in other videos, where you could actually go above that dollar amount, but we're just talking the traditional route today. Now, IRAs, currently in 2023, you are allowed to put away $6,500 into an IRA by April 15th. For the calendar year previous to the April 15th tax deadline. So 2023, we've got until April 15th of 2024 to put away that $6,500. If you are over the age of 50, you are able to put away an additional $1,000 for a $7,500 maximum for the year of 2023. 2024, that is going to increase to $7,000 per person. In the event you are 50 or older, you can now save an extra $1,000 as well. So you are going to have an $8,000 total, up $500 from the last year. Simple IRAs, the 2023 limit for your annual contributions is going to be $15,500. That is increasing to $16,000 for 2024 for the employees who are involved in the simple IRA plans. The catch-up provision is going to stay the same. If you are the age of 50 or older, you will be allowed to put an extra $3,500 per year into those simple IRA accounts. SEP IRAs, this is the one that might be new to a lot of individuals, where you can contribute the lesser of 25% of your gross income, or $66,000 in the year of 2023. That is getting increased to $69,000 in the year of 2024. Health savings accounts, if you have a self-only health insurance plan, you are single, in this plan type, you're going to have a 2023 contribution limit of $3,850 for this calendar year in 2023 that you can add to the account until April 15th of the upcoming calendar year or tax deadline. That is increasing to $4,150. Again, if you are a single individual under the age of 55 in both situations. If you are 55 or older, you're going to have an extra $1,000 catch-up provision, which you could add to that particular account. Now, if you have a family plan, the annual limits for a family plan is going to be $7,750. That is for 2023. 2024, you're going to have an $8,300 total limit with an increase of $550 on that limit. I hope this breakdown is very helpful. Take a screenshot of it if you would like to have this for your own reference in the future, or I might make this linkable down in the description as well. We'll see once you guys get down there. We just did a conclusion on the previous page where we were talking about the different account types and the annual contribution limits. In short, though, just a broad recap, we did discuss the 2024 contributions and how they have changed across the various account types, including the 401ks or employer-sponsored plans, IRAs, simple IRAs, SEP IRAs, and health savings accounts. So individuals age 50 and 55 and up, whenever you're talking about a health savings account, you can make additional catch-up contributions, which I wanted to make sure you were aware of if you were not already. There are diverse savings options amongst all those different types of accounts. Although we did not go into those account types today, there are tax advantages and disadvantages from one account or the other. Please make sure you're talking with your accountant or a financial advisor on this matter. In the event you don't have anybody, again, our contact information will be below in the description. Importance of deadlines. We hit all those deadlines for the different account types. A lot of them are going to be ending here in 5 days. Actually about 3 business days, because I think the 29th is what's going to be happening the year of 2023, the making of this video. But for the deadlines, you're going to have until the end of the calendar year or April 15th in most instances, depending on the account type. Plan and save wisely. The earlier you start saving, the better off you are going to be. The 8th wonder of the world, as one very famous man quoted, is compound interest. Maximize your contributions whenever available or whenever you have the opportunity to do so. Your future self will appreciate you for doing that, and consider diversifying your savings. I hope this is not treated as financial advice. Again, please consult with your financial advisor on what's going to be the best situation for you. Thank you for your time. Hope you enjoyed the video. Have a great day. Thanks.